Hello students, welcome back. This is Ms. Mercado speaking. Today in our Accounting 1303 Introduction to Accounting 1 course, we are going to be covering Chapter 8. Okay, Chapter 8 deals with payroll accounting, which is basically dealing with employee earnings and deductions. Now the next chapter that we're going to be covering back to back with this one is also a payroll accounting related chapter. So the next two chapters, which is Chapter 8 and Chapter 9, deal with payroll accounting. Now, Chapter 8 is specific to the employee side of it. So we're going to be doing employee earnings and deductions. While Chapter 9 is specific to the employer side of it. And we're going to be dealing with employer taxes and reports. Now, the textbook that we are using for this particular course is College Accounting 23rd edition. I do want to remind all of my students to please ensure to read the chapter in full before you attempt your homework assignments, okay? It is very important that you understand the concepts before you just dive into your assignments. This short lecture is not a replacement for you reading, okay? Now, I am going to go over one of a very important problem, which is basically I'm going to teach you how to prepare a payroll register, okay? You're going to be seeing this in your homework. You're probably going to see this in your test. So it's very important that you do learn how to complete a payroll register along with its journal entries, okay? So it's a two-part assignment here. So I am going to show you how to do that, show you the calculations. That way you can follow along and master this, okay? Because it is required. This is one of the fundamental areas that we have to cover on the employee side, preparing a payroll register, okay? So, like I said, I'm going to go ahead and before I start with the actual problem, I'm going to give you just a short overview. Remember to read the entire chapter. There's wonderful examples, diagrams, images that explain the concept of payroll accounting. If at any point you have any questions, please feel free to send me a Blackboard message or call me during my scheduled office hours. Okay. So now, just to start off, employees, we have to be able to differentiate between who is an employee and who is an independent contractor, because there's major differences in reporting for these two, okay? So basically an employee is anybody that works under your control and direction, okay? So this is basically anybody that you get to tell what to do, how to do it, when to do it, okay? You have control over this person, okay? They must follow your specific guidelines, your specific, okay, you're going to come in at 8, this is what your job consists of, you're going to go out for lunch at 12. You have that control and direction over your employee, okay? So, as the employer, you tell your employee what to do. There's that relationship where they have to report to you. You tell them what to do. You supervise them, kind of that deal, okay? So, that is an employee. Now, we have independent contractors, and what they do, what these people do, is they're basically performing a service for a fee, okay? But you hire these person, let's say, for example, you hire people to come and vacuum and clean all of your offices, okay? So you hire an independent contractor and you tell him, okay, I need these 10 offices cleaned, okay, in the afternoons. You know, after everybody leaves the office, I need someone to come in here and clean my offices, okay? So these independent contractors are going to provide their own cleaning supplies, their own people. They're going to come in here and they're going to work after the hour that you instructed them. Let's say you say, okay, you're going to come in here after 7 p.m. They're going to come in there whenever they please. It doesn't mean that they're going to get there at 7. It means that they're going to get their work done after 7. So they're going to go in there, they're going to clean your offices, and then they're going to send you a bill, okay? So, for the independent contractors, they provide the service, but you actually don't have any control of, you know, who comes in to clean, you know, the process of the cleaning, anything. You just pay them for the service. I need for you to come and clean my offices. This is how much I'm going to pay you every week or every month, whatever you agree on. And you don't care who comes, when they come, as long as they get the job done, okay? So, payroll accounting, the one that we're going to be working on in Chapter 8, is specific to employees, okay? Not independent contractors, okay? So, when we pay our employees, we have a long list of things that we need to account for, and we're going to go through that shortly. Independent contractors, we don't worry about them, okay? We just tell them, okay, I have this person or this company that's going to come in. I've got a contract with them. I'm going to pay them $2,000 a month, okay? All you have to do is write them a check for the company or the person, that whoever you're doing, $2,000, and you forget about them. You don't have to pay any tax, payroll taxes, anything. Okay. You're just providing or paying for a service. They give you the amount that you pay, and that's it. Okay. That is what an independent contractor is. Now, the independent contractor has to pay their taxes on the money that they're making. Okay. We're not going to cover that in this class. We're not covering independent contractors, how to calculate anything related to independent contractors. Our concern is, how do we pay our employees? The employees that work for the company, for our organization, the people that we have control of, the people that we hire, the people that we fire, the people that actually work for us. That is our goal. Okay? So we're going to be going over some reporting mechanisms or reports that we have to create. So the payroll register is one of them. So we have the payroll register, and then we have the employee earnings records. Okay. So basically what happens is the employee earning records maintain a record by employee. Okay. So every employee has their own employee earnings records, and they keep track of that specific employee. Okay. Now the payroll register keeps track of all of your employees. Okay. So it gives you a full view of how many employees you have, how much each of them has made, how much they pay taxes for each. It just provides a summary. We utilize the payroll register to record our payroll transactions. Okay. And we'll see the process in a little bit. Okay. So what the payroll register does, it provides a summary of all of the earnings for all of our employees. It's a wonderful document, a wonderful report. You pull it up, and it has all of the details by employee for every pay period. Okay, so the earnings records, this is the employee earnings records. It basically provides a summary of the annual earnings for an individual employee. So whenever we're looking at employee earnings records, that is for one employee. Okay, we're gonna have one earnings record per employee. So if you have 50 employees, you're gonna have 50 earnings records, a summary for each employee. The payroll register, on the other hand, is a report that includes all of your 50 employees. So it's a more in-depth report that has or includes all of the employees that work for your organization. Okay, so that's just some high-level information that I thought you would want to know. Now, we do have some examples, or some examples are provided to you of how people keep track of their time. Okay, keeping up with how much time you've worked is critical in payroll. Okay, we need to know to the minute how many hours did you work. Okay, so there's always a clock in, clock out system. Okay, and depending for the company that you work for, you might clock in using a punch card, which is kind of old-fashioned, but some companies still use it. So you have a punch card. Some people swipe a card. That way, you know, they get a company card and they swipe it every time they're gonna punch in or punch out. Other people punch in and out with the code, so it's more electronic, and they're giving you your employee ID code, and every time you log in, you know, you put in your code, log out, you put in your code, and the system keeps track of you based on your employee number. We have others where people clock in with either face recognition or with their thumbprint. Now this is more high tech. This is like the bigger companies that are more into technology, but it does exist. So you basically put your thumb, or it reads your face. It has face recognition, and that is how you clock in or clock out. That is a wonderful way. That way there's no cheating. You know, the system has to know that it's your finger or it's your face. If not, it will not clock you in and out. But it is kind of expensive. So a lot of people or a lot of companies have not transitioned into it. But these are just some general methods of how time is kept. Okay? Regardless of the system that the company uses, you have to keep up with your time. How many hours did you work per day? Okay. So here we just have an example of a time card. You have the employee's name, their employee ID number, the department that they work for, and then the pay period that this particular time card is for. Then you have a breakdown of the dates, what time they clocked in, what time they clocked out for lunch, what time they clocked in back from lunch, and what time they clocked out and left for the rest of the day. Okay. So then we have the number of hours that person worked, regular hours and overtime hours, and then we have our totals. Okay, and then we have an approval here of who verified that they work. Okay, in payroll, it's very important that your supervisors are always ensuring that their employees are actually physically there. Okay, a lot of individuals, you know, call their friend up and say, hey, This is Pablo. You know what? I'm going to be a little bit late. Can you clock me in? My code number is 1234. Okay? So he's being clocked in by someone else. The supervisor has to always be aware, who is in the office on time, who's clocking in, who's clocking out, and keep track of all this. Because this is money that's leaving the company, because you are paying your employees to work. So they should be expected to work. Okay? So this is just an overview. Now, we are going to be preparing a payroll register. Okay? There's several steps that are required to determine how much we're going to pay an employee for the payroll period. Okay? So the first thing that we need to do is calculate total earnings. Okay? We have to figure out if this employee worked more than 40 hours. That way we can pay them overtime. So the first 40 hours, unless otherwise noted, there are some companies that do make exception to that rule. But for the most part, your first 40 hours are considered regular pay. And I just realized I put an extra T here. Okay, let me delete that. Okay, so usually 40 hours constitutes a normal work week. Okay, that's regular pay. Any work above 40 hours is overtime. Okay, usually the overtime rate is time and a half, 1.5. Okay, now there are exceptions to the rules, and I'm not going to go over those major exceptions. I just want you to know there are some companies that maybe pay double if you work on the weekends, or they pay you double if you work on a holiday. So there are specific payroll guidelines depending on the company that you work for. But for the most part, your first 40 hours are regular pay. Anything above 40 hours is paid a time and a half. That is how we calculate your overtime. Okay? So after we calculate your earnings, we have to calculate your deductions. How much are we going to take away from your paycheck? Okay? And this money that we take away is to pay for payroll taxes and other deductions. Okay? So there's several taxes that we employees are liable to pay, and we'll go over these taxes briefly in a minute. We also have other deductions. Maybe you're paying for your vision, medical, dental, any kind of supplementary short-term disability insurance. Maybe you're investing in your 401k. There's just so many deductions that are available out there that can be included. Okay? So we have to identify the deductions for each of the employees and deduct it from our total earnings. Okay? So, step number 1, you calculate the total earnings. Step number 2, you calculate the amount of the deductions. And then step number 3 is you're going to subtract your deductions from your total earnings to be able to compute your net pay. And this is what you take home. Okay? So gross pay is before deductions. That is how much money you make. Okay? Net pay is what you take home after taxes and deductions. This is what you actually get to spend. Okay? So a lot of students get confused between gross and net. Gross is what you actually make, what you earn. Net is what you take home after your deductions. Okay? So deductions from gross pay basically fall into 3 major categories. We have our income tax withholding. We have our employee Social Security and Medicare taxes. Everybody pays these. And then we have our voluntary deductions. Okay? So everybody pays income tax, everybody pays Social Security and Medicare taxes. Okay? Now, some individuals have more or less deductions than others. It just depends on what the employee selected. Maybe the employee, does not want to pay for health insurance. Then maybe Pablo is not going to have health insurance, but Maria will. Okay? So those deductions can vary by employee. Okay? So there's 4 factors that determine the amount to be withheld from an employee's gross pay each pay period. Okay? So the factors that determine the amount of the deductions are your earnings, your total earnings, your marital status, married or single, the number of withholding allowances you're claiming. Okay? Now, I'm not going to go into specifics, but I know some people that they claim when they, got a job that they had 10 dependents. Okay? So what happens when you claim 10 dependents? You're not going to pay any federal income tax. Why? Because you have too much dependents. It's going to go over the bracket amount. So a lot of people do that. But at the end of the year, when the employee has to make their income tax return, well, they don't have 10 dependents. They only have 1. So what's going to happen? They're going to have to pay back the government for the federal income tax that was not withheld from their paycheck each pay period. Okay, so it's very important that the number of withheld allowances claimed are correct. You cannot guarantee this because this information is provided by the employee, but just make sure that you make aware or you provide the information to your employees and let them know that it is critical that they provide the correct number of allowances, because that drives the amount of federal income tax that will be withheld from their paycheck. Okay. Another factor is the length of the pay period. Are they getting paid every week, semi-weekly, semi-monthly, quarterly? How are these employees getting paid? Okay. So this is just some information that is very important for us to know before we dive into the problem. Okay. So now we're going to go and we're going to cover problem 8-9A from the end of your textbook. Okay. This is coming from the chapter, the end of the chapter. You have all of your exercises and problems. I put a print screen here, that way you can either view it or print it out. I recommend you print it out, that way you can follow along more easily. Okay. So, problem 8-9A. Payroll register and payroll journal entry. So it says, Mary Lodge operates a travel agency called Mary's Luxury Travel. She has 5 employees, all of whom are paid on a weekly basis. Okay, so we know that we pay them weekly. The travel agency uses a payroll register, individual employee earnings record, and a general journal. Okay. Mary's Luxury Travel uses a weekly federal income tax withholding table like the one in figure 8.4. Okay. So what I did is I went ahead and I copied figure 8.4 right here. This is what you should be looking at. This is coming from your textbook. Okay. So the payroll data for each employee for the week ended March the 22nd are given below. Employees are paid 1.5 times the regular rate for hours over 40 a week. Okay. And then they give us a list of the 5 employees, their number of allowances, their marital status, their hours worked, their rates, and their total earnings. Okay, so the Social Security tax is withheld from the first $128,400 of earnings at the rate of 6.2%. So what does that mean? That means, according to the information provided in the particular chapter, now this is an older edition. Okay, Social Security caps or the limits are established every year or updated every year. Okay, so this is probably not accurate because we are running in an older edition, but we are going to be using the information provided in the textbook. Okay, so our cap for Social Security is $128,400. So what does that mean? That means that you're going to pay 6.2% on the first $128,400 that you make. Okay, once you go above that amount, then you're not responsible to pay any Social Security tax. Okay, so there's a cap for Social Security tax. Okay, so your Social Security tax only on the first $128,400, and you're paying 6.2%. Medicare tax, you pay 1.45%, and there is no cap. So you can make $1 million, and you're still going to pay 1.45%. There is no cap on the Medicare tax. Okay, so we don't have to worry. The cap is only on your Social Security component. Okay. City earnings tax is at 1%. Both applied to gross pay. Okay. Now it's telling you that bacon and loom have $15 withheld, and coal and cakes have $10 withheld for health insurance. Okay. It says the bacon and loom have $20 withheld to be invested in the travel agency's credit union. Coal has $38.75 withheld, and Hicks has $18.75 withheld under a savings bond purchase plan. Mary's Luxury Travel's payroll is met by drawing checks on its regular bank account. That's how they pay the employees, with their bank account. The checks were issued in sequence, beginning with check number 423. Okay. Now the requirements. The first requirement, they're asking us to prepare a payroll register for Mary's Luxury Travel for the week ended March the 22nd. It says here, in the taxable earnings unemployment compensation column, enter the same amounts as in the Social Security column. So they're basically telling you here that whatever you put in for your taxable earnings for Social Security, you're going to put the same amount for employee compensation. Now, they're doing this because we have not covered unemployment compensation. That is going to be covered in Chapter 9. Okay? So for now, they're telling you whatever amount you get for your taxable earnings for Social Security, which we're going to calculate. So basically, your Social Security taxable amount is any amount from $0 to $128,400. Anytime we go over the $128,400, we don't have to pay any taxes. Okay? Total the amount columns, verify the totals, and rule with single and double lines. So they're asking us to prepare a payroll register. Okay? So now, this is the table that I told you we're going to be using. This is only for married persons. Now, when you're doing your problem, if you remember, we have married individuals and we have single individuals. Okay? So make sure that you're looking at the correct table. Okay? All of your tables are provided in the problem. When you go into Cengage, you're going to have links to be able to open the different tables and look at the different table information. Just make sure that whenever you open them, you're looking at the correct table. Okay? Okay, so what I did, I created the payroll register in Excel. That way I can go ahead and I can demonstrate what we're going to be doing. Okay, there we go. Okay, so what I did is I entered the name of the employees that was provided to me, their number of allowances, and their marital status. Okay, now I am going to go ahead and I'm going to show you in detail how to complete the calculations for Bacon or Andrea Bacon. Okay, I'm not going to go in detail once I cover the specifics for each one because that will take me about an hour, hour and a half if I'm talking, over 2 hours. So I don't want this presentation to drag. But I am going to go in depth with Andrea Bacon. I'm going to provide you with the answers for the rest. That way you can maybe solve them on your own and compare your answers with what I have provided so you can be able to use it as guidance. Okay? So I will do some of the calculations randomly, but don't expect for me to go through every single calculation for all of 5 employees. The concept is the same. If you get it for one, you should repeat the same steps, just using the different amounts. Okay? So let's get started. I'm going to do Bacon, Andrea Bacon. Okay? So, she has 4 allowances and she's married. Now, the first thing we have to calculate is her regular pay. Okay? So, if we go back to the problem, it says that Andrea worked 44 hours, okay? And she gets paid $14 an hour, okay? So, she works 44 hours and the rate is $14 an hour. And so far, between January the 1st and March the 15th, Andrea has earned $6,300. That is the cumulative pay. That is how much she has made year to date. It is very important that we keep track of this because we need this information, because once this employee reaches $128,400, guess what? This employee doesn't have to pay any more Social Security tax. Okay? So we need to keep track of the cumulative pay for several reasons, that being one of them. Okay? So this is the information provided. 44 hours, gets paid $14 an hour, and has earned $6,300. Okay, so I recommend that you print this out. I have it printed and I'm looking at it on my paper. That way I don't have to be scrolling back and forth. So I recommend that you print it. Okay, so now to calculate the regular pay, I'm going to put my notes down here. That way you can see what I'm doing. Regular pay. To calculate my regular pay, I know that it's going to be 40 hours. That's what the problem says. And this person gets paid $14 an hour. Okay? So I'm going to get my calculator out. Okay? I'm going to move it over here. So it's 40 hours at $14. That's $560. Okay? That's how much the person makes on regular pay. Okay? So my regular pay is $560. Okay? So I'm going to go ahead and I'm going to enter that information right here. Okay. Now we have to figure out, did this employee earn any overtime? Well, according to the problem, this person worked 44 hours. So that means they had 4 hours of overtime. Okay. So let me move this table to the end. That way I don't have to be going over it, okay? So, we have overtime pay now, okay? So now we have our overtime pay. So we know that this employee worked 4 hours of overtime. And this person is getting paid, well, before I do this, let's figure out the overtime rate. Well, first, I'm going to put here overtime pay. Okay, so step 1, calculate overtime rate. Okay, and that is going to be my regular pay, which is $14 times 1.5. Okay, so let me get my calculator out. Okay, so $14 is my regular pay. Time and a half is 1.5. You multiply it. That's going to give me $21. So any hour that I work over my 40, I am going to get paid $21 an hour. Okay? Now step 2, you can calculate your overtime pay. Okay? So I know I have 4 hours of overtime times $21. So that's going to give me 4 times 21. That'll be $84. Okay. Excuse me, I just sneezed. Okay, so we have $84 of overtime. Okay, so now for your, let me do this. For your total pay, you're going to get your regular pay plus your overtime pay, which is equal to $560 plus the 84. And that's going to give me $560 plus 84, $644. Okay. So that's how we get the total pay. They made $560 in regular, the 40 hours. Then they made $84 on the 4 hours of overtime. Their total earnings is $644. Now to get the cumulative total, we're going to go back to the problem. And this person had earned $6,300. Okay? So we're going to get the total earnings from January the 1st through March the 15th. They provided here. So that's $6,300. Let's make a note of that. Okay. So your cumulative total is your total earnings from January the 1st through March the 15th, provided in problem. Okay. Plus your total earnings, okay, which is going to be equal to your $6,300, which is your total earnings between January the 1st through March the 15th, plus your $644, okay, and that's going to give you $6,300 plus $644. That's going to give you $6,944. Okay. Let me see this. I don't want to lose it. Okay. Now, these two columns here under taxable earnings, these represent the amount of your the amount of your earnings, this particular column right here, how much of that amount are you going to pay taxes on? How much of that is taxable? Okay, so it's not asking you to calculate the actual tax, but it's asking you, okay, out of the $644 that you earned this week, how much of that are you going to pay unemployment compensation, and how much of that are you going to pay Social Security taxes? Now, the problem says clearly that you're going to pay Social Security taxes on the first $128,400. So, has this employee earned $128,400? No, we haven't reached that limit yet. So what does that mean? That means that the entire $644 that we just earned this week, guess what? We're going to have to pay taxes on it. Okay? So what this does is that it identifies how much of that is taxable. How much of your total earnings is taxable? So that's where you have to look at your cumulative total and say, okay, I have a cap here. I'm going to put that here. My cap is $128,400. Okay. Oh, I'm going to cut it and I'm going to paste it right here. Okay. So, for your Social Security, the cap is $128,400. So that means that you are liable to pay taxes on the first $128,400 that you make. So in order to determine that, you look at this column right here. Okay? You look at this column. Did I make $128,400 yet? No, I've only made $69.44. So that means that out of the $644 that I made this week, guess what? I'm going to have to pay taxes on the entire thing until I reach my $128,400. Okay? Now, the problem specified right here on the requirements, it says, in the taxable earnings, unemployment compensation column, enter the same amounts as in the Social Security column. So, basically, they're telling you whatever you enter in Social Security, copy it over to unemployment compensation. Those are the instructions for the problem only. That's not what we do in real life. Okay? We're going to learn what we do in real life in Chapter 9. Okay? Just hold on one more chapter. But per the instructions in this particular problem, it says, in the taxable earnings for unemployment compensation, enter the same amount as in Social Security. So that's what I'm going to do. I'm following instructions. So, what's going to happen is I'm going to pay taxes, unemployment compensation on the $644 that I earned. I'm going to pay Social Security taxes on the $644 that I earned. Now that we identified how much of our total earnings is taxable, I can start calculating my deductions. Okay? So, I'm going to continue right here with my taxes. So now I'm going to calculate my federal income tax. Okay? Now for your federal income tax, let me close this. I don't need this open. Okay. For your federal income tax, the problem says that the federal income tax that we're going to be using, Mary's Luxury Travel uses a weekly federal income tax withholding table. Okay, so we're going to go to our withholding table. Okay, now before we go into our withholding table, let's read the problem. It says that Andrea has 4 allowances and is married. Okay, and these people are getting paid weekly. Okay, so you need to know this information so you can look at the correct tax table. How frequently are they getting paid? Weekly. How many allowances are they claiming? 4. Okay. What is their marital status? Married. Okay. So once you have that, you locate the correct table. This is for married persons. Okay. This is for these are the amounts of earnings. Okay. These are the amounts of your withholding allowances that you're claiming. So the first step that we have to do here is calculate our federal income tax. So this particular week, Andrea Bacon earned $644. This is what we're going to be looking at, okay, total. Okay, so I'm going to go to my table and I'm going to look for the 644 tier. So it falls where? Well, it falls right here between 635 and 645. Okay. Now, Andrea, what was her name? Andrea? I don't remember. Let me see. Andrea had 4 allowances. Okay, so we're going to go to the number of allowances, which is 4. We're going to go to the amount that she made this week, which is between the 635 and the 644. And wherever these rows intercept, that is the amount of the federal income tax that we're going to withhold. So we are going to withhold $10 from Andrea. Okay? 4 allowances, and this is how much money she made this week between this particular tier. So the withholding is $10. Okay, so I'm going to go back and I'm going to enter my federal income tax. Okay, so here for federal income tax, I'm going to put here refer to tax tables provided in the end of, or it's provided in Cengage, okay, in Cengage or textbook. Okay, so this is not something that you're calculating. This is something that you're getting from your tax table. You locate the correct table, make sure it's married, for married individuals, or there's one for single. Okay, the taxes do vary by whether you're married or you're not married, so make sure that we are using the correct table. I've had a lot of situations where students are doing the process correct, it's just that they're using the incorrect table. Okay, so Social Security tax. Okay, now the problem says that your Social Security tax rate is 6.2%. Okay, so I'm going to go ahead and here I'm going to do Social Security tax. Okay, so for your Social Security tax, you're going to look at your Social Security taxable earnings times the Social Security rate, which my Social Security taxable earnings, we identified them right here. Okay, my Social Security taxable earnings are $644, and my rate is 6.2%. Okay, so I'm going to get my calculator out. So it's 644 times 6.2%. That gives me 39.928. Okay, so we need to round. Okay, so because the third digit is an 8, it's greater than 5, I'm going to round this to a 3. Okay, so it'll be $39.93. $39.93. So make sure that you are rounding correctly. I'm sorry, I was typing the wrong number. Okay. Medicare tax. Okay. Medicare tax, it tells you that your Medicare tax rate is 1.45%. Okay. Let me circle these. Okay, so my rate here is 6.2%. Okay. For that, and then my other rate here is 1.45%. Okay, so Medicare 1.45%. Okay, so my Medicare tax, all these pop-ups. Okay, so you're gonna do your Social Security. Well, in this case, no. For the Medicare tax, there is no cap, so you're just gonna do your total earnings times your Medicare rate, which is going to be your $644 times your 1.45%. So that's going to give you 644 times 1.45%, 9.338. The third digit is an 8, so I'm going to round to 9.34. Okay. That's going to be the amount for my Medicare tax. Okay. Federal income tax, Social Security tax, Medicare tax. I am forgetting one tax. Let me insert it here. I am forgetting my city tax. You have city tax. Now, not all cities have taxes, but this specific problem does. Now, your city tax, according to the problem, is 1%. City earnings tax is 1%. So, this is where I'm getting this information, 1% right there. Okay. So, I'm going to go back and I'm going to do for my city tax, the total earnings times your city tax rate, which is going to be your $644 times 1%. And that is going to give me 644 times 1%, $6.44. Okay? So I'm going to put those $6.44 right there. Okay? So, did this employee pay for any health insurance? Okay? So let's go back to the problem. Okay? Bacon and Loon have $15 withheld, and Cole and Hicks have $10 withheld for health insurance. So they Bacon is getting withheld right here, $15 for health insurance. Okay, that is given to you. So I'm going to put for health insurance, $15. Do they have any additional deductions? So let's look at Bacon, Andrea Bacon. Let's see what else they have. Okay, Bacon and Loon have $20 withheld. Okay, so over here, $20 withheld to be invested in the travel agency's credit union. Okay, so I'm going to go ahead and I'm going to put that under other. Okay, so under other, I'm going to put credit union. Okay, that way I know what they're putting their money for, and they're investing $20. Okay, so for the credit union and health insurance, okay, information provided in the problem. Okay. Okay, now we're going to get our total. Now this one's very important. Okay. So it's going to be your total earnings. Okay, but before I do this, let's first calculate our total here. Now my total here is the total for your deductions. Okay. That is the total for all of the deductions that you have. So you have to get a total. So I'm going to go ahead and I'm going to add my federal income tax plus my Social Security tax plus my Medicare tax plus my city tax plus my health insurance plus any other amount that I had. Okay, I think I put in the wrong column. Okay. So that plus that plus that plus that. All of your taxes, all of your deductions, okay? And I get $100.71. So I'm going to do it down here, okay? The total deductions. Is your federal income tax plus your Social Security tax plus your Medicare tax plus your city tax plus your health insurance plus any other items that you have, okay? And then that is going to give you $10 plus $39.93 plus $9.34 plus $6.44 plus 15 plus 20, and that gives you the $100.71. Okay, so this is how much I'm going to take away from your paycheck. Okay, now it's very important that we understand that this money that we're taking away is not being taken away and used up by the employer. It's basically being collected, and the employer collects the money and then distributes it to the different entities, the government, the health insurance company they have to pay. So all they're doing is they're doing all of this work on your behalf. Okay, they're calculating how much money you made, how much money do you have to pay for the different deductions that you have, and then how much money are we actually going to give you in cash so you can spend. Okay, so you made $644. Well, Andrea did. Andrea made $644, and she has $100 with 71 cents in deductions. Okay, that is how much money is going to be taken away from the paycheck. Okay, now this is how much money you're actually going to get paid. Let me change the color here, that way we have different things going on. Well, maybe I should be consistent, Claudia. Be consistent. Okay, I'm going to do this one. This one will be blue. and this one will be green. That way I maintain my consistency. I love color, okay? And the net pay is going to be bright yellow because that is how much money you're actually going to get paid or take home, okay? Now, to calculate your net pay, you're going to get your total earnings minus your total deductions, and that is going to give you your net pay. So it'll be your total earnings minus your total deductions, and that's going to give you your net pay, $543.29, okay? So I'm going to put that down here. Net pay equals your total earnings minus your total deductions, which is going to be $644 minus $100 with 71 cents, and that's going to give you $543.29. Now the problem said that we are going to start with check number 423. Okay, so we're going to use that information in the problem. So we have check number 423. Okay, so we've completed all of the calculations for Andrea. Okay, I've got them all down here in the bottom, so you can refer to them. You're going to use the same information, the same concept, but now you're going to do it for the rest of the employees using the information provided here, okay? I am not going to go over this in detail because it will take a very long time for me to explain every single thing. But I have explained the entire process for Andrea Bacon. So what I'm going to do is I'm going to go ahead and I'm going to enter the amounts for the rest of the employees. You can do the calculations on your own. That way you can check your work. Okay? But I do need these totals so that way I can show you the next part of the problem, which is calculating or doing your journal entries, okay? So let me just quickly enter all of these amounts here. And I'm going to put some formulas, that way I can just drag and drop. Okay? The power of Excel. Okay, so I'm just going to do this. Okay. Accumulated earnings. 67.50, 64.26, 2104, and 65.25. Okay, okay, 600, 621, 504, 580, 600, 621, 504, and 580. So just remember that the taxable earnings is how much of this earnings for this week are you going to pay taxes on. Okay, for Social Security, remember we pay taxes on the first $128,400. Are these employees close to that? No, they're not. They barely earned in the 6,000 range. Okay, so they still have ways to go to reach the cap. So what does that mean to the employee? That they're going to be paying Social Security tax until they reach that cap. Okay, now this green section right here, this is the amount of actual deductions. How much money are we going to pay or deduct for taxes or other deductions, okay? The federal income tax, remember, is coming from the tables provided in your textbook. Make sure that you are using the correct tables. That way you get the problem correct. Social Security tax is basically the amount of your Social Security taxable earnings right here, times the 6.2%. Okay. Medicare tax is the amount of your total earnings times 1.45%. Okay. Remember, Medicare does not have a cap. You always pay Medicare tax on everything that you make. The city tax was 1% of your total earnings. Okay, if you're going to look at your total earnings, you're going to multiply by 1% to get your city tax. Okay. Now the health insurance information was provided to you in the chapter. Everybody has health insurance except Carol Young. She does not have health insurance. No, I'm sorry. The one that does not have health insurance is Melissa Milling. Melissa does not have health insurance. Okay? Everybody else does. You have 15, 10, 10, and 15. And this information is provided in the chapter. Okay? Right here. Loan 15. Bacon and Loan are withheld $10 for health insurance. So that information is provided to you. It's there. And then we have some other items. We have 2 employees that are investing in bonds. So we have $38.75. We have another bond right here for $18.75. And then we have credit union for $20. Okay. Now we're going to get the total deductions, which is basically what we're doing is we're basically adding all of our deduction columns. Okay, we're adding our federal, our Social Security, our Medicare, our city, our health insurance, and our other. And this is a total for all of this information right here. Okay, so that is the total right there. Okay, now for my net pay, I'm going to get my total earnings minus my total deductions, and that's going to give me my net pay. Okay, so let me just double check my figures here. 543.29, 448.35, 522.54, 386.40. Okay, 509.83. Okay. Now the textbook says that the checks are in numeric order. So we start off with 423, 424, 425, 426, and 427. Okay. So this is what your payroll register looks like. Now I'm going to get totals. Okay. I want to know my total for all of my employees. Okay. I'm just going to do a sum of all of the 5 employees. Okay. And I'm just going to run them across because I'm kind of lazy. Okay. Okay. So these are my totals. So what I did here for my totals was I basically just added down for my 5 employees. I added all my regular pay. I added all my overtime pay. My cumulative total. Now for the cumulative total, let me see. That amount, yeah, it's correct. Just want to make sure because of the rounding. Okay. So let me double check these figures just to make sure that they are correct. I don't want to give you the incorrect information. So we have 2784, 165, 2949, 32749, 2949, 2949, 136, 182. Okay, now this, we do put it out with 2 decimals. So let me just do 2 decimals for all of them. Okay, there we go. Okay, 182.84, 42.76, 29.49, 50, 97.50, and 538.59, 24.10. Okay, so all of my numbers are correct. Now, when you're doing your homework, make sure that you do read the specific instructions provided in Cengage. Okay, they do explain to you how to round. They do explain how to enter the information because they are very specific as to how you enter the information in the system. Okay, so just make sure you're aware of that and you read each of the instructions for each of the problems. Okay. Now, I need this information, my totals, so I can be able to prepare my journal entries. So what you have here is a completed payroll register. These are my 5 employees, and this is how much they earned in regular and overtime pay. This is their total earnings. Okay. This is how much they've made thus far in the year. Okay. This is how much their taxable earnings are. Out of how much they earn, how much do we have to pay taxes on? And then we have all of our deductions here. How much are we going to take away for federal income tax, Social Security tax, Medicare tax, city tax, and other. Okay. We calculate our total deductions, and then finally our net pay. This is the amount that you're going to take home. So Andrea Bacon earned $644. She's going to get deducted $100.71 for the different taxes and deductions. She's going to take home $543.29. And she's going to get paid with check number 423. Okay? So make sure that you practice the rest of the employees on your own time, because I'm not going to go over. All of the descriptions or the calculations are provided here, so you can follow along and replicate. Okay? Now, once we have our completed payroll register, we are being asked to prepare the journal entries for the payment of the payroll. Okay? And this is happening as of the end of March the 22nd. Okay? It says here, assuming that wages for the week ended March the 22nd were paid on March the 24th. So we want to know, when exactly are we paying our employment so I can record my entry? Where the payment is going on March the 24th. They're asking us to prepare the journal entry for the payment of the payroll. Okay? So we're going to go to my journal entries. This is happening on March the 24th. So if your payroll register is complete and is correct, then you will have no issues completing this. It's just basically copying and pasting your information from here. Okay? So the first thing that we have to do is we have to enter the amount of the actual wages and salaries expense for the period. How much is it costing the company to have these 5 employees work for them? Okay? Wages and salaries expense. Okay? Well, I'm going to go to my payroll register. You know what? I'm going to notate here what column I'm getting the information from. That way, you know, you can trace it back. Okay? I'm going to put here the information. So, how much did my employees actually earn? Okay? During this particular period, how much do I owe them for their service of working for me? Okay? What's the expense, the company's expense for having these people work for us? Well, we're going to go to the payroll register and we're going to look at the total earnings. Okay? So I'm going to pick up that number right there. Okay? And I'm going to be highlighting them as I use them. That way I know that they're being used. Okay? So the amount that the employees that I am responsible, or my employees, earned during the period is $2,949. This is the expense to the company for having 5 employees. Okay? So the amount will be $29.49. Okay? It's a debit because all of your expense accounts have a normal balance of a debit. Okay? So this is going to be coming from your total earnings. Refer to total earnings. Okay? The next thing we're going to do is we're going to put all of the money that we took away from the paycheck into specific accounts. Okay? We need to put them into accounts because, like I said earlier, this money does not belong to us. We have to pay this money to the different entities. Okay? So I need to put them into payable accounts. Why? Why payables? Because this is a liability. We owe this money to someone. This money does not belong to us. So we have to establish a whole bunch of payable accounts, liability accounts, so we can put this money aside, and when we have to submit payment, we just get the money from our payable and submit the payment, write a check or whatever the case might be. Okay? So the first thing that we're going to do is we're going to go ahead and we're going to do our employee federal income tax payable. Now, remember, anytime you see the word payable, that is a liability. My normal balance is a credit. So here we're going to be having credits. Payables are always credits. Okay? So, federal income tax. I'm going to go back to my federal, my earnings, my payroll register, and I'm going to look for my federal income tax, and the amount is $136. So I'm going to enter that over here. The next item we have is my Social Security tax payable. Okay, so let's look at our payroll register for Social Security. It's $182.84. Okay. Next we have Medicare, forget to indent, Medicare Tax Payable. So you have to have a separate one for each item. You can't group them together. You have to keep them separate. They're different taxes. Okay. So my Medicare Tax Payable is $42.76. Okay, $42.76. Okay. The next one we have is City Tax Payable. Okay. So my City Tax Payable is $29.49. Okay. So you see, we're just getting the totals from the payroll register. All the work has been done. Okay. Now we have our health insurance. Okay. Health insurance premiums payable. Okay. This is how much we have to pay the insurance that covers our employees for health insurance. Okay. So we're going to look at health insurance and we're going to pay $50. Okay. Next we have our credit union payable. Okay. My credit union payable is the $20 and the $20, so that's going to be $40. Okay. So that's going to be $40. Next we have our U.S. savings bonds. Okay. I'm going to go and check what my savings bond is. I have $38.75 and $18.75. So let me get my calculator out because I don't know how to do the math in my head. $38.75 plus $18.75. That will be $57.50. Okay. And now, how much cash are we actually paying our employees? Okay. The amount of your cash amount will be your net pay right here. That is how much you're actually paying out your employees. Yes, they did earn $2,949, but I deducted $538.59 from all of these individual items. So now I'm only going to pay them in cash $2,410.41. Okay. Now, me, just for, because I do have several transactions, I want to make sure that my journal entry is in balance. I'm just going to add them quickly to make sure that my left side equals my right side, okay, which it does. So I'm good, okay. You don't have to do this on your journal. It's not required. I like to do it because I know that my debits equal my credits. Now, I got excited and I forgot to put my notes here, but this is basically coming from refer to federal income tax total. Okay, then for this one you're going to refer to Social Security tax total. For this one you're going to refer to city tax total. For this one, you're going to refer to health insurance premium, health insurance total. I'm just going to make it short. Okay. Oh, sorry. Am I writing incorrect? Okay, let me see. Maybe I'm typing incorrectly. Okay, federal income tax, Social Security. Oh, here I skipped one. Cut and paste. So here is Medicare. To Medicare total. Okay. Add, here you're going to add the two credit union amounts only. Okay. So for that one, you're going to add the credit union right here, the first one and the last one, for $20 each. For the savings bond, you're going to add the two U.S. savings bonds amounts only. Okay? And then your cash is going to be your net pay. Okay? So that is how we got all of those numbers. So all you're doing is just going to your payroll register and you're looking at your total column. You're going to get the total for all of the items that apply. Okay? To get your journal entry, make sure that when you do your journal entry, your debits always equal your credits. Okay? So that is how you complete the journal entry for this particular assignment. That we're asking you to prepare the journal entry for the payment of the payroll. So now, if you're wanting to pay out your employees, this is the journal entry that you're doing. Okay? We are recognizing an expense of $2,949. This is how much the company has the expense for payroll. Okay? We deduct all of the employee-related taxes and deductions. And then this is how much they're left with, how much cash we're going to pay them. And then, of course, you just need to make sure that your debits equal your credits all of the time. Okay? So this is very important. We've learned how to complete a payroll register. All of the tax calculations are included. I have taught you how to look at the federal income tax table. Make sure that you are looking at the correct table. And I've taught you how to prepare your journal, general journal for the entry. Okay. If you want to put a description, you can do that as well. I don't know if your homework is required, but you can just put payroll for a week ended March the 22nd. Okay. And that's what you do. So this is the end of my presentation for Chapter 8. Make sure that you do read the chapter. If you have any questions, please do not hesitate to let me know as soon as possible. Monday through Friday. That way I can reach out to you with, an answer or a clarification before the end of the week. And that way you can get working on your assignments. Okay? So that is basically it for today. Until next presentation, make sure that you are staying on task with all of your assignments and making sure that you are meeting all of the assignment deadlines. Okay? Thank you very much. Until next time.